Welcome to the Capital Spreads Weekly Update. Today is Wednesday the 28th of July 2010 and we are just about making a gain on the week so far in the FTSE. We were a little bit higher. We did test 5400 and rejected that yesterday, so now we're just about making a gain or pretty much flat, only some 30 points or so since we started trading on Monday. And the market is trying, it would seem, to sort of forge to new highs, having recently just breached various resistance levels around 5300, 5350. And it seems like the market is just finding a little bit of difficulty around the 200-day moving average. Recently there's been a lot of calls for lower prices after a death cross in moving averages was crossed a couple of weeks ago, and obviously the fall below the 200-day moving average was, a lot of people were saying, is a serious signal that we are in a new bear market, and we'll see the FTSE fall and continue below 5,000, but it has recovered relatively well. But for now we're just finding it a little bit more difficult to maintain this momentum higher after a decent rally, some 10% from the lows of a couple of weeks ago. We've had some relatively mixed data this week as well, with poor consumer confidence data from the US yesterday, which seems to be the reason why we're having this little bit of a pullback today. But on the whole, economic data hasn't been too bad. And of course, the highlight of this week, more than anything else, has been the European bank stress tests that were completed at the end of last week. So banking stocks have actually done very, very well so far and have been contributing to the majority of the gains so far. And of course, the news about BP, but more on BP in the theme of the week. So the current situation is the FTSE is around 53.30 at the moment, the Dow 10.530. The euro dollar has made it above the 1.3 level and seems to be happy above there. It's currently around 130.30, and of course cable is also doing well. And it would seem that these two currencies have done well in the face of weakness from gold. Yesterday, gold had quite a big sell-off and actually broke below its lower upward trend line, which certainly has got a few of the bulls a little bit jittery. Gold is now around 1160. And it would seem that the weakness from yesterday is just following through a little bit, and so, as I say, bulls a little bit nervous on gold at the moment. Clients, how are they trading? Well, they're long the FTSE, so they feel that maybe the FTSE's got more momentum and should push on higher, maybe back beyond the 5400 level. But conversely, they're actually short American indices, in particular the S&P, and they're short the German DAX. So a little bit of a differential play there by clients. In the currencies, euro dollar, clients are actually flat now, euro dollar. They were previously short, they were opposing the trend, the climb by euro dollar back above the 1.3 level, but it would seem that that area has very much stopped those short positions out, and so now really we don't have much position in euro dollar. Clients are very much flat. They're long gold and they're long oil, so again, as mentioned, this correction in gold seems to be attracting clients. A few clients were stopped out, of course, in that sharp move lower yesterday, but overall clients remain very bullish of gold. For the rest of the week, we've got UK consumer confidence numbers out, so it'll be interesting to see how they respond to the weak consumer confidence from the US yesterday. That is expected to decline a little bit, and then we finish the week off with US GDP numbers and US Chicago PMI numbers, both of which are expected to decline a little bit. So we get the feeling really that in order to maintain this good rally we've seen so far in July, we would have to see some good economic data for the rest of the week. So the theme this week, as mentioned just earlier, it's definitely BP. We've seen Tony Hayward now finally resign. The company actually came up with some good revenues. Of course, if you strip out the liabilities and costs that they have set aside for the oil spill. But it would seem that the company, certainly from a PR point of view, is trying desperately to turn a corner. So they announced the new CEO, Robert Dudley, who is an American himself. So hopefully that may curry favour with the US administration, which has been incredibly harsh of BP. And going forward, the difficulties, though, are still there. So BP's share price has been hovering around £4 and hasn't really made any ground following the news of the new CEO and the resignation of Tony Hayward, because investors over the long term look at BP and they see that it does face severe headwinds going forward. The ability to be able to maintain its drilling contracts in the US and continue operations there remain in doubt, and not only that, winning future contracts are always going to be very difficult from now on. So £4 is where we are now. Where we'll be in 6 months is really anyone's guess, but we will have to wait and see. So if you have any feedback on that, as ever, please do give us an email, drop us an email at media@capitalspreads.com.